the stock market turning yet? I see a lot of Emmy action here. I don't see any W's yet. Let's pull out to just a daily chart. Do you see W's here yet? Not yet. But if we take like the NASDAQ, for example, there's probably a ton of names in that NASDAQ list that, and like I said, that tech, there's one stock that actually I could short or hunt shorts, but I mean, look at that. Just look at that image. Is that the type of image where you think you should come along and, hey, I'm going to buy a put option and get rich? Or I'm going to short that outright and I'm going to get rich? I'll tell you, folks. I mean, let's, instead of me ranting and barking the answer to you, I want you to figure out the answer. So, what is the very first rule that we always, every time you ever pull up any price chart, learn this for the rest of your life? The very first price chart you always pull up, the very first, not price chart, the very first tool that you want to apply to every single chart, just to give you an idea, is the market to be bought or is the market to be sold going forward? What is that tool? Well, you're heading in the right direction. Let's be a little more specific. More there you go, Nicholas. Right? Remember, this is the very first technical lesson I ever learned, right? Back in the 1980s. Right? This should be like our core for level 1. You always, always, always do this. The answer to do this is, what is a, give it to me, people. What is a, excellent, BT, you nailed it. Good job. Come on, all you 15 people here. No, well, that's, we use the 38.2 as a measurement as to whether the previous down move is over or whether maybe we're starting a new trend, right? The first stop target. And you're right. We always want to look for that. But the knee jerk is you always take the 52-week high plus the 52-week low. So there's last June, July up there. So that means we got to use these lows. And you're going to draw back to whatever the 52-week high is. Just as simple as that. And probably a good idea in your fib tool, create a 50% rule tool. This is your keep you honest indicator, folks. Been at this stupid game 30 bloody years. Don't fight this. It's just not worth it. But this is what you do to every single chart. Every single chart. Always. And it doesn't matter. So just looking at that image, do you think you should be shorting or do you think you should be considering buying? I mean, just keep this as simple as possible, people. And the irony of it all is, you know, we can start applying more and more tools to help us determine trend, but this is the easiest way. So, I mean, just give me a very simple, very quick answer. Should we be thinking that the market should go up from here or go further down? Come on, keep it as simple as possible, people. Good. All right, you're here for your lesson. You're here for your private tutorial. There's no sort of free ride on these daily briefs. You have to work. All right, so the point here is, oh, nice then, likely up. Just the point here is, coming in on the short side here, you're actually asking for trouble, believe it or not. Now, you might say, and remember Colin and, you know, his work over at that Hero Exchange, I think they did really great work and he did great videos and stuff. And he sort of bastardized my first stop target and our 50% rule in his Colin pump chaser zone. In this case, it would be the dump chaser zone. So we can't even really decide if this market is still a bear or has transitioned into a bull until we at least test that area. Does that make sense? Right? In reality, this could very easily be a dump chaser zone, which means that actually you want to join the short trade, but you don't want to join the short trade down there. And then, you know, Brian and his crazy bot setup. If I did want to short this, what's the absolute minimum I need to see as a counter trend rally for me to set up that new short idea. Anyone? Anyone? No? 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 Nope. Nope. Oh, gee whiz. Okay, let's rephrase the question. Hey, there, Bob got it. Yeah, way to go, Bob. What is when you trade the bot setup and you're going to gave the answer to the bot. That's my trend continuation setup. What is this setup levels that actually say the bot is alive, right? Well, let's where is the mouse? We go there, and we go there, and we go boom. I have to see at least a 33% retracement and no more than 66. And ideally, right, we want this to be a symmetrical ABCD, symmetric market loves symmetry. So the best case scenario for my trend continuation, I think the market needs to head lower is, give me a nice little counter trend rally right into the midpoint of that said range, which of course midpoint of this is the 50% rule. So in simplest terms, you should look, and all of you should do this. So you really should. If you want to get good at trading, you want to get good at this, you always want to look at the market. And I'm even up here, right? This is, notice that there's January. Remember I said, what were we saying in January? Because when you did the 50% rule back in January, and you go 52-week high against 52-week low, where the hell is the previous January? Holy bejesus. Oh, here we are, January here. So that's basically that low right there. So up here in January, can you see how we should not have been thinking about moving to new highs? We should have been thinking about the market coming down. Does that make sense? Do you see? I'm telling you, folks, this 50% rule, it will keep you honest. It will keep you out of a lot of trouble. I suppose one could argue, well, Brian, if I did 50% rule here from that March to the next March peak, we never did get down into 50% rule. And yet the market kept going higher. So screw you. I would say that this, looking for this trend continuation trade to move higher, I think is actually a late story. And what's interesting about this, of course, is shouldn't we debate mortgaging our future? Shut the fuck up, right? Throw money at the market. And then, and if I'm not mistaken, I think it was either in here or maybe it was here. They had that secondary financing, the secondary big spending program. And everybody says, now, hindsight's 2020, that second stimulus program that they did, that's what caused most of this inflation. So I can understand that you went, well, Brian, your 50% rule didn't really work very well here. And I would just simply say that, well, yeah, investing in this part of the market was actually asking for trouble. And interesting enough, all the way along here, and this is where new shorters, new aggressive participants often get burned in the market, is they're like, okay, I'm going to short that double top, and where's my 50% rule? I think up here you should have been thinking 50% rule. And the problem with this right up here is I believe that this latter part of 2021, of course, you all know what happened in crypto. This was a trap. And it sucks. I'm not going to sugarcoat it. It's brutal. If we look at a lot of the crypto names, of course, some of them went completely destroyed. So, I would make the argument, because this 52-week range now is pretty low, I might even make the argument that maybe what we've done here is now done a 50% retracement of the whole damn move, which in a weird sort of way is actually an affirmation that the market is no longer overbought.